Hello traders, this is Okane and welcome to Japanese Candlesticks Part 5, 7 Bullish Reversal Patterns You Must Learn. So we have covered the basics of Japanese candlesticks, then I talked about pin bars and the Pinocchio strategy. So check out the playlist, the how to understanding Japanese candlesticks, the playlist. From the beginning, if you are not familiar with candlesticks yet, if you don't understand the candle wicks and the body, the price, what they represent. And in this case, as I mentioned, we're going to talk about 7 bullish reversal patterns because I have covered bullish continuation patterns, bearish continuation patterns. So this time we are looking in downtrends. So in a downtrend, in a bearish market, we are looking for signs that the bullish market will take over, that the bulls will take over, and we'll have a bullish reversal. And as always, you need further confirmation, whether you prefer to use 1 or 2 indicators or draw your lines and trend lines, support resistance lines, or any price action analyzes you prefer. So make sure you have those, and so you don't just blindly follow the candlestick formations, because alone they don't say much. Just because you recognize a candle and you read somewhere that it's going to be it means bearish or it means a signal for a call, it doesn't mean you should jump into a trade. You should see the bigger picture, so bear that in mind. And let's start with so remember, we're looking in these 7 candlestick formations that I'm going to show you. Because they're bullish reversal patterns, you must look for them in a downtrend. Okay, so the first one is called bullish abandoned baby. I don't know who names these candlesticks, but actually in this case it does make sense. If you look at the picture above here, you see, you understand why it's called bullish abandoned baby, because first you have a bearish candlestick. Remember, the black ones are the ones going down in this case, so the bearish one. So that means that price is heading down, and then this candlesticks closes and it's black. Why? Because it closed bearish. And then you have a doji. If you are not familiar with what a doji is, go back to the doji and pin bar video and check it out, and then come back. So you get a doji because the market is in indecision. You have equal amount of buyers and sellers, so the price closes at the same place it opened. And then there's a gap, so notice the gap in the picture. There's a gap between the bearish candlestick and the bullish candlestick. So the bullish one opens higher up where the doji candlestick closed, and it continues up. It doesn't close completely over or not above the bearish candlestick, but it's a sign that the bulls might be coming back. But as I said, look for confirmation. Is this near a support? Then obviously there's a higher chance. If you're using an oscillator and it's oversold, signaling oversold, then that is even better. So now you have 2-3 signals. So check for the signals, see the bigger picture. So let's move on. Bullish breakaway. Bullish breakaway. This one consists of 5 candlesticks, as you can see in the picture here. 4 bearish candlesticks represented by the black candlesticks. So 1 large, and then it's kind of slows down. That's, if you are familiar with volatility and volume, you know that bigger candlesticks mean bigger volume. So in this case, the smaller ones are with lesser volume, so lesser sellers in the market. So they're slowing down because more and more sellers quit selling the asset, and that's why the volumes of those candlesticks are getting smaller, because we might be probably approaching a support line. So that's why price is slowing down before it moves up. So that's a sign. And then you see a bullish candle, the white one, going up. So signals that now the sellers are exhausted and the buyers have entered the market. So bullish breakaway, and that was number 2. So let's move on to number 3, candle formation number 3, bullish ladder bottom. Okay, so in this case also 5 candlesticks, 4 of them which are bearish, the black ones, with larger volume than the one we spoke about right before, so larger volume than the bullish breakaway. So the bullish ladder bottom, 3 large bearish candlesticks, followed by a 4th bearish candlestick. It resembles an inverted hammer, if you want the name. So the bears managed to push down the once bullish candlestick. It was a bullish candlestick before. That's why the wick, because when it opened, it went up, but then the bears pushed it down. That's why you get the candle wick. So the sellers won this battle. But then the bull candle opened with a slight gap in relation to the inverted hammer, and closed well above at least the 2 previous candlesticks. So again, this is the textbook version of this candle formation. So in reality, the bull candle might be bigger. Then in that case, that's much better if it engulfs the other candlesticks. So that's a ladder bottom, because it's like a ladder, it climbs down. And let's move on to the next one, bullish 3 river bottom. Okay, so take a look at the picture first. You see one rather large bearish candlestick, and then you have the candlestick with the tail, with the wick, which represents a hanging man. You could call that a hanging man, because this time, so in this case the wick is at the bottom, meaning the bulls pushed it up. So this candle used to be completely bearish all the way down, but then the bulls didn't let it close down there. That's why they pushed it up like that. So that's why you get the candle wick, the tail there. So the next one, the 3rd candle, the final candle, the white one, it opens lower below, kind of from where the candle wick started, slightly above in the picture, and it was pushed up and closed near the close of the previous candlestick, the hanging man, or close to the first candlestick's close end price. So this means that obviously the support seems stronger, because first you have the candle wick and then you have a bullish candlestick, meaning that the sellers might be exhausted. So bullish 3 river. And then the next one, let's move on to the next one, bullish gravestone doji. This one only consists of 2 candlesticks, gravestone doji. Why is it called this? Because, well, after the first candlestick, after the first bearish candlestick going down, probably towards a support, you get a candlestick that looks like a gravestone because of the huge candle wick, and then there's almost no body on that candlestick. So it was completely pushed down, and it closed. So we could say, and why is this? Why do you have the candle wick again? Remember this, apparently this candle, when it opened, it continued up. Okay, it just went up, but then managed to close because the sellers entered the market and pushed it down, and it closed down here, and that's why you get the candle wick. So that means that the last of the sellers, you could say that like, yeah, this is the gravestone of the sellers, so now they're all gone because they fought till the end. And so if you want to put it that way, and then you should definitely wait for one more candlestick after this. I don't think two is enough. You should wait for a bullish candlestick to start and to close somewhere slightly higher up than the gravestone. If you get a doji, you should wait because that's indecision. So, but if after a gravestone, if you get a good bullish candlestick, that's a good sign. But again, that's just one sign. You should look for other confirmation. Now let's move on to bullish engulfing. I don't know if you remember engulfing from previous videos. Regardless, I have covered it before. So again, if there are any names you don't understand, like dojis, engulfing, candle wicks, go back, watch the other videos, give yourself some time to digest, and then come back. Don't worry, the market is not going anywhere other than up and down, maybe sideways sometimes. But anyway, so bullish engulfing, you have the price. Once again, we're in a downtrend because we're looking for bullish reversal. So in a downtrend, you have one bearish candle closing, maybe near support, and then you get a bullish candle with quite a large volume, totally engulfing the bearish candlestick. So this is good because it means that the bulls are winning over. There's a larger volume of buyers, and that's why it's a good sign of bullish continuation. So this one was a quite easy one. So let's move on to one more. Bullish concealing baby swallow. I know it's a very strange name. And this is the last one, by the way. This is number 7, formation number 7. Concealing baby swallow. Okay, unlike what you might think based on previous patterns, this 4 candle formation does not include a bullish candlestick. So look carefully at the picture. You have 4 bearish candlesticks. All of them are black. So you have 2 candlesticks dropping down, and there is no candle wick on them. We call those maru bozu candlesticks. That's the name. And then the third one, you have the inverted hammer like kind of candle because it was bullish, but then it was pushed down. And then you have the last candlestick. So what does this mean, this last candlestick? It means that price opened higher up to almost near where the second candle opened, okay? And then it dropped down all the way below the inverted hammer and closed down there. So the buyers opened the price all up here. So it was a gap when it opened because once again, the bearish candlesticks always open up and close down, right? So if we would analyze, we would think about how it looked before the formation. It would tell us that after this hanging man, after the candlestick with the wick on it, the last candlestick, it opened well above it, and then it fell down below it and closed. So because it opened so much higher up, it means that there are a lot of buyers. So even though there are no bullish candlesticks there, it means there were buyers. And the two last candlesticks actually say that there are buyers in the market now, because the first one was also bullish but then was pushed down. You see the candle wick, and the last one opened much higher up and closed down. So closed in the same area. So probably once again, maybe a strong support is there. Maybe the levels are, if you have an oscillator, RSI, stochastic or something, you will see maybe it's very oversold in that area. You have maybe support from a moving average or something. I would suggest you wait for a bullish candlestick to confirm this before you jump in. So the fifth candlestick might actually be might actually close a bullish one, a white one. So those were all the 7 candlestick formations, I believe, for this time. But there will be more on candlesticks in the future. Also check out the price action videos, because I show you step by step how I proceed, what my thought process is when I locate a trade, a potential trade, how I set my target, how I set up my lines, how I know it's exactly that entry, and I talk about everything, basically expiry, trend, volume. So check the price action and the videos what I say I've taken trades. And we have some articles on binaryoptions.suck.com about candlesticks. You should read them too. And to repeat myself one more time about the importance of understanding candlesticks, so check out the entire playlist of candlesticks. If you're a beginner, you should learn those, especially the basics of candlesticks. You don't need to learn all these names. It's good that you have seen them at least once or twice, but the basic things like dojis, pin bars, the candle wicks, if you understand the candle wicks, then you're gonna come very far. That's all. You don't have to know all the names. Even I don't know all the names. I would have to look them up. But if you understand candle wicks, you know what price is doing. Just like when I explained this bullish concealing baby swallow, the last one there, number 7, you saw that I could analyze what had happened in the market. Okay, I didn't have to go to Wikipedia to see what happened, but I could just tell by the candle wick, and because I have experience, I know where the candle opened, where it closed, so I could analyze what's going on, that there were buyers, and so that's it for now. I will see you next time. Thanks for watching.